Ho 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 everyone. Welcome to this week's watch list review. Um, it was a tough week, and I said that in last week's video. It was going to be a lighter volume week. Probably see some chop, and I think I was pretty accurate. We did grind slightly higher throughout the week, but it wasn't. Um, it was hard to make. It was hard to scalp, and I'm mainly a scalp trader. It was hard to scalp because the moves took so long. If you take a look here, take a look at SPY. I mean, yeah, we ran up every day, but if you look at the shorter time frames, let's say 30-minute. Monday we gapped way down Monday, and kind of had that rounding bottom, and then Tuesday we gapped up and sold off, and then we started climbing. Um, when you're scalping, you know, it's hard to. I can't go back too far, the 5 minute, but when you have this after the first, I don't usually trade anything till after 10 o'clock. 10 o'clock started right about here. From here on, we only had, that's 470. We had a $2 range from 10 o'clock on. And while it sounds like $2 is a nice scalp, when you get stuck in all this here, this is really hard to trade. Really hard to scalp because you're buying weekly expirations, and the theta on them, which is time decay. For those of you that are new to options, theta is the when you buy an options contract, it decreases in value over time. So let's say you buy it on Monday. Let's just say, for example, you paid $1 for an options contract for a call on Monday morning. And let's say the price of that underlying stock, let's just say it's Apple. The price of Apple stock did not change the whole entire week. It stayed flat the whole entire week with maybe 5-cent move. And I know that's not likely, but let's just be hypothetical here. Tuesday, that $1 contract may only be worth 90 cents. Wednesday, it may be worth 80. Thursday, it may be worth 60. The closer you get to it, the faster it depreciates. So, and I know most of you know that, most of you are aware of that, but just in case there's anybody here watching that's not familiar with options. So, when you buy, this was Friday. When you buy, actually this was Thursday here. Market was closed Friday. When you buy a call, let's say, I don't know, let's say you decided to buy right here on this inside candle. Let me zoom in a little bit. Get an inside candle here, you decided to buy. You only had, from the break of this high, 471.14 to 471.32. That's not much of a move. So let's say you bought it here. You're most likely going to stop out here, but let's just say you didn't stop out. Let's say you paid $1 for it here. And because these options expired the same day, they call them 0 DTE, 0 days to expiration. If you bought it right here and you wrote it out to here and you paid $1 here, even though the price went up, you're up 471.14. Let's even say here 471.82. You're not going to be up that much because the theta would have taken away so much value between here and there that it would have almost offset the increase in the premium. So let's say you paid $1 for it here, and let's forget about theta, forget it exists. Right here, this contract might be worth $2, but theta took its toll, so now it's only worth maybe $1.20. Now, granted, that's still a 20% gain, But look how long of a time you're holding it over on the last day of expiration, and it's just hard to trade. It's hard to scalp uh, options when there's not a lot of movement. Average true range on SPY is $6.67, and there was only a $2 move. Not counting the first hour, because like I said, I don't trade till about 10 o'clock most of the time. So 10 o'clock is right here. So we had 470, let's just call it 470 flat to 472.19. $2 move the whole entire day when it's normally 667. I shouldn't say that because we're discounting this. So that 667 would include all this too, but still, even without that, we had a $3.55 move when the average is 667. And that's just mainly because of lack of volume. There's just not enough volume to push it one way or the other. So, and I expect to see more of that this week. So, anyway, let's take a look. Last week we had TLT, we had Chewy, they were inside weeks. Then we had 2 up with a red close and 2 down with a green close. And I explained those in last week's video. So let's take a look. TLT. Take a look at the weekly. We were looking for a break above this inside candle. We didn't get it. That was a no trigger. It did break the low of the candle, but that's not the way we were looking to move. So that's a no trade. Chewy. We were looking for a break to the downside. We didn't get that break, so another no trade. Apple, we were looking for a 2. It was a 2 up with a red close, so we were looking for a move to the downside. We got that move to the downside. Let me zoom way in. We broke the low of this 2 candle, this 2 up, and that's the whole idea here. You have a 2 up that's red. So the premise is that when the market opened this day, the bulls rode it up, pushed it up to gap up, but shortly after the open, the bears took over and drove it back down. So at the close of this candle, the bears were in control. So what we're looking for is a break for that bearish pattern to continue, that bearish push to continue. So I still have this cough. So we're looking for a break below this 2 up, and our main target is here. We didn't quite get there, but like I said, me being a conservative trader, I moved to lower time frames, and this is exactly why. Even though we triggered and we went the direction we wanted, we didn't hit which our magnitude would have been here. We didn't get there, but that's why I go to lower time frames to look for shorter targets. So let me go back. So we were looking for what was our break right here? We were looking to break this low here, which we did. Target 1 was this low here, and there was a small gap there. So if you look and see, we basically filled that gap and just barely a little more, and that was it. And then it bounced. So that's why I look for time frames on a shorter, or look for targets on a shorter time frame. If I would have stuck to, what was it, this here? This was no, the magnitude was way down here. We didn't even hit magnitude. Magnitude was way down here, I think. If we would have been looking for magnitude, we probably would have stopped out of this trade. So, yeah, if we would have, let me rephrase that. If we'd have been looking for weekly magnitude, we probably would have stopped out of this trade. But this is why I say to go to smaller, shorter time frames and look for targets there. Your first target was here. Second target was the gap fill. I didn't trade this, but if I did, I probably would have been selling some right here, and then move my stops to break even. So I would have made a little bit of profit. I don't believe I traded this one. The next one's Walmart. Oh, fat fingers. So let's take a look at Walmart on a weekly. Walmart, we were also looking for, I mean, basically a 2 up with a red close. We're always looking for a move to the downside on that setup. So we got it here, we triggered, and we hit target 1. Again, same thing. We had a 2 up with a shooter, which is a pretty strong bearish signal. But we didn't hit our magnitude on the weekly chart. So again, we go to the daily chart, and we triggered it here, went down. The low of this candle was 137.60. Target 1 was 137.57. And I've said before, you can go back and look at my older videos, I always say I sell just slightly before my target. If my target's 137.57, I'm going to sell at 137.47, because 137.50 is, I'm sorry, I'm going the wrong direction here. I would be selling this one at about 137.60 something. 10 cents before my target, 5 to 10 cents before my target. You see here we hit 137.60. We missed our target by 3 cents. That happens often. Now, we may continue this down and then hit our target to hit that target. But I would be stopped out of this. I only trade weekly, so I would have been out of this trade. So that's what I look for here. That's why I go to a shorter time frame to look for targets, and I would have probably been out of some of it right here. Not a huge move, not even a dollar move, but when you're talking weeklies, especially on what day did we trigger that? We triggered it right here, so yeah, you may have stopped out of this anyway if you did get in, because it opened down here, so it gapped down below the trigger, and then I'd have to look at even a shorter time frame, which I'm not going to do, but it may have even went down here further and then bounced back up. If it went down and then bounced back up, you would have been okay with your target there. But Piton, either way, this whole watch list isn't looking real good. And you'll have that, they're not all going to work out great. This one here, we were looking for, this was a 2 down with a green close. So we were looking for a target, or for a trigger up to the upside. We did not get that. So this was a no trade. And that was the watch list for this week. It's okay to not have good weeks, or not have good trades. I don't want to say good weeks, because you want to have a good week every week. But these are probably 2 of the toughest weeks of the year to trade. This week and this past week and this coming week, probably 2 of the hardest weeks of the year to trade because of volume. As with I'm sure many of you, most of you that have regular day jobs, most people take their vacation during that time, and it's no different with Wall Street. A lot of people take their vacation during this time, so you just don't have the volume. A lot of people are busy. A lot of full-time traders, day traders, they just take the week off. They know it's not going to be the best week to trade. They've done their trading for the year. They're done. They're going to take the week off. So a lot of retail traders sit out too. So just not one of the better 2 weeks to trade. And I'm going to say the same about this coming week. I'm going to do another video right after I'm done with this one. I'm going to do my video on this week's watch list. There's some pretty nice setups on there, but I'm going to be very careful with them because I know volume's going to suck. So I'm just putting that out there ahead of time. Volume's not going to be good. It's going to be tough. And to be honest with you, I don't even remember if I was green this week or not. I trade out of 2 different accounts. I do remember this. One account's a larger account. It's an IRA, and the other account's my day trading account. And one of them was red this week, one was green this week, and I don't remember which is which. Either way, neither one was big moves. The one that was red for the week wasn't red by much. The one that was green for the week wasn't green by much. And the IRA account I don't typically day trade out of. That account I usually keep stuff. I'll keep stuff in there at least a couple days. I have maybe 6 or 7 stocks that I bought, and I'm just holding them. They're all stocks. They're all common stocks. They're not options. I have Apple. I have Q's. I have SPY. I have Tesla. I just bought them and just hold them in there, and I don't typically buy, day trade those. Now, if I see a nice setup on a monthly chart, I'll go ahead and buy options for that particular one out of that account, and I'll set a stop and set a target, and I just won't look at it again. But I don't buy weekly options in that account. I'll buy them like a month out at least, depending on what charts I'm looking at. So, or what time frames I'm looking at. The day trade account, the smaller account, that account, as I'm sure I've mentioned it and you guys know, I have a debit card connected to that account. It's got hit twice this year. So I just got a new debit card here last week. That account, I add money to, I take money out. So it's always fluctuating and not necessarily based on my trading. I might have a nice green week, but at the end of the week my account's lower because I've taken money out. So that one I don't want to say I don't track how well I'm doing, because I do track how well I'm doing, but the balance fluctuates in it so much. This past summer I took quite a bit out of that account, and I was down to less than half of what I had in it before. And I took it out to buy something. So that account fluctuates a lot. So, and that's one reason why, because it is a smaller account, I'd be okay with sharing the balance and showing everybody on here how it's doing, but it would be too hard to do because I'm putting money in, I'm taking money out, and it would be just too hard to keep up with it and to keep track of whether or not it's, how fast it's growing. So, because I considered sharing the balance on here in that account and just showing every week what the balance is, but like I said, it fluctuates so much just because of me, I don't want to call it play money, but it's money that it's an account that, I play around with the money in it. So play around with it as far as putting money in and taking money out. So it wouldn't really be very accurate if I try to do something like it. Later on, I may start another account, create another account, maybe start with $1,000 and share that balance every week and not touch that account. But we'll see. Maybe once things settle down in the year. January is usually kind of a tough month to trade. People are still doing, still some selling, still deciding what they're going to do, feeling things out. January, at least for me, hasn't been the best month. So, but maybe after that we'll look into that. But don't hold your breath on it. It would be very hard to trade out of 3 accounts. So, all right, thanks for watching. I'm going to do my weekly watch list video right now. As soon as I end this one, I'm going to start on a weekly watch list video. So next weekend I have, I think, 7 videos I have to do. So yeah, I have to do a weekend. I have to do the month end. I have to do the quarter end. That's 3 videos. And then I didn't do it yearly for this year, so I don't have to do a year end. But then I'm going to do a new week, new month, new quarter, and new year videos. So that's 7 videos I'm going to have to do this week. And I really don't want to put them all in one video because I don't want to have a video that's an hour long. And plus, when I go back to review them, they're going to be different. The end of the week, I'm going to review the weekly. And then at the end of the month, I'm still going to have the weekly on that monthly video that I'll be reviewing for the month. So I'm going to try to keep them all separate. But that's 7 videos I got to do next weekend. So I'm going to be busy next weekend. Again, thanks for watching. I hope you guys are watching these. I hope you're learning. I hope you're making money from them. Typically, it's not a normal week. It's not a lot of work, but like I said, 7 videos next weekend. It's not just the time doing the videos. It's running all the scans. Next weekend, I have to run scans for the weekly. I got to run scans for the monthly. I got to run scans for the quarterly. I got to run scans for the yearly. Then I have to do after I run the scans, I have to review the charts to find the best charts and eliminate the ones I don't like. Then I have to go in and mark my charts, and then I have to do the video. So I'm probably going to have probably a good 10 to 15 hours in next week's videos, at least. Maybe, you know what, I bet it be more than that. I'm probably going to have a good 20 hours in at least next week just doing videos next weekend. So, like I said, I hope you guys are learning. Hope you guys are watching them. And I really hope you guys are making money from them. So, thanks again, and I'll see you shortly on the next video. Bye.